Your insights, Jared Berg, there from the NAB.
Thank you.
Now, as I mentioned before, 1300 30 34 35 is the number to call. Email us your call at yourmoney.com.au. In fact, let's go to a viewer email now. Roger has written in to ask, based on the earlier discussions that today's market downturn can provide buying opportunities, your thoughts, please, on Main Pharma. Did you want to kick us off on MYX, Elio?
Oh, look, Roger, there's a few things that I'm going to regret not being on this TV station anymore. One of them was that I never got to celebrate a Carlton Grand Final victory with everyone. The other is that there's still retail investors that hold Main Pharma. The challenge with Main Pharma, unfortunately, is its generics business, and it has been flagged for quite some time. And in fact, in that update today, you would have noticed the company said that they're going to have a review on the intangible or the goodwill value of its generic products, which when you think that it makes up around, I think if my memory serves me correct, around 70 to 75% of the revenue for the company. If that ends up being a huge write-down when June comes around, or the report for June comes around, there's a real risk that this company could move from acceptable financial health into unacceptable financial health, and then obviously then there's the question of debt covenants and a few other things. So the reaction you're seeing today, Roger, is a real disappointment reaction, in the sense that you know, this is a company that we knew was going to have a challenging environment. Everyone knew that was the case, but everyone was always forward looking into the next year. But now with the threat of, you know, asset write-downs and the like, there's many people just parking their money elsewhere with, you know, it's too hard to find bottoms in these types of stocks. You're better off just finding companies with blue skies on the horizon rather than trying to pick the bottoms on stocks like this. And you don't need to be an ardent fundamentalist, I suppose, to know that that things have been a challenge, and you know, the chart's been showing that for a while, David.
Yeah. Right, exactly. I mean, technically speaking, this just have been, you know, it's just all the one way down. In fact, I was speaking to an investor who hasn't done my workshop yet, and I said to him, you should come along, and he said, how much is it? And I told him, and he said, oh, that's a bit expensive. I said, if you think that's expensive, try ignorance. That's far more expensive. But he obviously didn't know how to read the trends and didn't have an exit, and he made the classic mistake that a lot of investors have made, and I've made certainly in the past, is when you're buying in a downtrend, and he bought more. So he bought the stock over $1, and then he bought more at 80 cents, and now here we are at 56. No doubt, I'm sure that he'll probably be considering even buying more, you know, at this level. And that's just typical of what investors, the mistake I've made in the past and he's been making. And you know, I can tell you right now, it's costing him thousands and thousands of dollars. So again, education to me is one of your best investment, best investment you can make. Whether you follow any of the rules is another thing altogether.
I mean, although, David, I do want to just mention, you know, we happily sometimes buy into stocks in a downward trend, provided we've got two key elements. One, conviction in the business, and two, it has to be a quality company. You know, so obviously there's a distinct difference, because markets, they never go in a straight line northeast stocks, so sometimes a pullback creates the opportunity. Provided it's a quality company, provided you've got the conviction, you can get in. Main Pharma is not one of those businesses. And the other thing is too, I've tried to buy ignorance before, but I can never find it on sale. It's always full price. Why is that? Anyway.
Main Pharma really feeling the hurt today, though, down by about 16% or so now. Roger, thank you very much for your email. Let's take a caller now. This is Dennis. Dennis is calling in from Melbourne. What is your question for the panel, Dennis?
Well, I was wondering, I'm looking at a company, Chorus, and I wondered if the panel could see some blue sky, as one member quoted, for me.
In Chorus, okay. Thank you very much. Is this something that you follow? Is Chorus, you're familiar with Chorus?
Yeah, no, I am very familiar with Chorus. It's a big hello to our friends across the ditch. Of course, it is the New Zealand version of what the broadband network effectively is here. Just instead of being the NBN, which was a privately listed or private company here in Australia, in New Zealand, it's a publicly listed company, and you can actually invest in it. It is an infrastructure play. They own basically the fibre and the lines that power the internet. Its share price has had a very good run up, unlike the trials and tribulations of the NBN network here in Australia. Being a publicly run entity has worked better for them. The dividend yield sits at around 3-odd%. The earnings have been very lumpy, but again, that's because they are an infrastructure play, and there's a lot of adjustments made to their accounts for various things like write-downs and a range of things. So it's not your traditional industrials type business. The only challenge that Chorus have ahead of it, and the uncertain element, is that we've got Telstra here saying that they want to bypass the NBN and they want to basically go mobile with 5G. Well, as much as Mr. Penn might take credit for that idea, it's actually not his idea. Spark in New Zealand, Spark New Zealand, which is the equivalent of a Telstra over there, has been already embarking on a strategy of taking clients off the wire and actually putting them on their broadband network, effectively saving them about $40 odd a customer per month that they actually get to pocket themselves, rather than necessarily provided that payment to Chorus. So look, you do need the infrastructure, you do need fibre, you need all those bits of network. There's absolutely no disputing that. It's just one of those uncertainties in regards to whether this movement towards more of a mobile universe will be enough to create a dent. But for the minute with Chorus, it's doing exactly what it's designed to do. It's not exciting, it's pretty boring, it's paying you a steady dividend through the cycle. No franking credits because they are New Zealand based, as I said, but nonetheless, it's been a good return for shareholders.
Chorus at about 583 today. What do you make of Chorus?
I'd be a seller of this stock. No kidding, I'd be taking everything off the table here. It's gone ahead of its game. We've got an indicator here that's pretty reliable. It's been extremely reliable 80% of the time. My RSI indicator, which is a general, it's not mine, it's well known. Way overbought on the weekly and also divergent on the daily, so this tells me this has gone ahead of itself. I mean, this stock has almost doubled in 12 months. I mean, the earnings the earnings growth is not there. So why is it doubled and it's trading on an earnings multiple that's up in the 40s? So I would be a seller of this one. I would not be a holder at all. Definitely, and looking at lower levels, if it pulled back to about $5 or below, between $4.50 and $5.
Okay.
But it's a sell for me.
It's a sell for David. Okay. Chorus, as mentioned before, about 583 today. We want to move on to another caller now. This is Alex, who's calling in from Melbourne. Alex, your question is about Bubs.
Yeah, hi. My question to the panel is about Bubs Australia and its recent announcement of adding cow milk formula to its range. Do you see it gaining market share in the next 12 months? In the last week, the price has been on a roller coaster ride. Yeah, thanks.
Okay. What did you make of that deal about adding its organic cow milk to its infant formula?
Yeah.
It made a niche market for the goat milk.
Yes.
And now it's expanding to cow milk. Should it have done that, or should it have just stayed with the niche market?
Yeah, organic grass-fed. No, don't laugh, David. It's a serious business, this stuff, what you put in our little darlings' mouths. It's, you can't be just throwing any. So, I mean, how did human evolution evolve without this sort of stuff? I mean, it's unreal.
I'm glad you've got this question and not me.
No, well, look, in all seriousness, no, with Bubs, there is a lot of hype priced into this particular business. Obviously, it's going into a very lucrative market. We know that there is a definite appetite in China for clean, organic products, not only from Australia, but from New Zealand as well, of which, funnily enough, Bubs is sourcing their particular milk product from. Yes, obviously, it's good to sort of stand alone and be known for something, but if they may be very well seeing something that the market hadn't prior. In the sense that maybe they do need the cow's milk in order to be able to meet the lofty expectations of a thirsty market, as it were. So again, whether you're half glass or half full will depend on how you interpret this latest announcement. Obviously, milk, powdered actual dairy milk, or cow milk, I should say, makes up about 90 to 95% of sales of all infant formula around the world. So they were very much in a niche play. They're now going into where the I suppose the big money can be made, but the problem is it is more competitive, and that'll be their challenge.
Yeah.
That's the thing I was about to point at,
Yeah.
you know, was that. And again, another profitless company, you know. That's,
Yeah, absolutely.
It's all baked in
hype. It is.
expectations,
Yes,
you know.
very much so.
So for that reason, I mean, but look, the trend has been really strong here. And if you got in at lower levels, you know, you would have taken some profits, hopefully. But, you know, greed is good.
Okay. Greed is good. I should either get a T-shirt for you that says your trend is your friend or greed is good. So
On the back.
Bubs today at about 1:33. Thank you so much for your calls and your emails. Keep your calls and your emails coming in. We'll answer more of your market queries after this short break. Do stay with us.